Okay, hi guys. Sorry about the technical issue on that last attempt. But let's have a little look at BTC first before we have a look at the Joseph Nemeth strategy and how it applies in crypto, and particularly in BTC or XBT, I think as it will be today, because I'm on BitMEX at the moment. So this is, hopefully you can see this. This is the XBT USD chart on BitMEX that we're looking at right now. So let's have a look at the update first. In fact, let's just zoom out a little bit so that we can have an idea of where we are. Following on from our last video, we're at the absolute crunch end of the apex, and we've got several of these kind of diagonal key trend lines. In particular, the two important ones here are these two purple ones. And the first one, this one here, let's color that slightly differently. Let's color it like this. This is in the ordinary scale, regular scale. And you see I'm cutting it along the top of this from this point and pretty much at the top of here all the way down. If we zoom in on that, you can see, bang, we went through it and under it again. Okay, so we had a horrible fake out of that yesterday, and we're back under it. That's the key sort of, what they're calling it, diagonal doom at the moment. And you can also see the red diagonal from here for that other triangle, the red one, which we did successfully break out of and hold. But a lot of times with these very long-term diagonals, it doesn't make much sense to be using the regular scale. It makes more sense to use the logarithmic scale. If you're on a short term, there's practically no difference between the logarithmic and the regular scale for a diagonal. They're so close together that you wouldn't notice the difference. But when you're going on something as big and a bigger move, as long a move as this, it makes a big difference. So now we're on logarithmic, and notice that that previous line now makes no sense at all. And now we have the purple line coming onto the top here. And wow, where does that end at the moment? At the moment, it's around 7,130 something, much higher. And so we can get a breakout here, and oh, we've broken out the year-long pattern. Everything's wonderful. And we haven't. Won't truly break out until we get past here, hold the retest, and then we're off. And that kind of thing happened a lot of times with the original descending diagonals. Okay, so let's just have a look at that. So in that last video, we were talking about horizontal supports. Well, a lot of the time, what's more important is the diagonals. That's what I was explaining back then. I think diagonals make more sense. And look at that diagonal. Yeah. Pretty precise rejection there. Now I'm still on the logarithmic. Pretty precise rejection here. And it sent it all the way down. Finally broke out, held it, and we're off. Okay, so that's an example here of the true breakout. But if we do that same line between these two peaks on regular, Just put that up to the top. Take that. Oops. Okay. Yeah. Here's an example. So more or less through that. It looks like we break through it, almost like a fake out. We reject it. We come out of it. Yeah, we're through it again, and we keep on breaking out. See, it doesn't really make much sense. It doesn't really follow on very well. Possibly you could say it comes down to around here. Yeah, it does. So on the bigger time scales, it doesn't make much sense to use regular scale for these diagonals. And I see people always doing it. Okay. It doesn't make all that much sense. So try to use log scale on these long-term diagonals. That's my tip for you. In fact, let's have a look at even this. As I said, it doesn't make that much difference though when you're more zoomed in. So this one, the red one, yeah, it's pretty much touching both these 2 points, and we are clearly broken through it on log. So this one is no longer relevant, quite frankly, although I wouldn't be surprised if we broke under it, but that's another question. So now we can go back to, oh, this is regular, sorry. Oh, my mistake, that. On logarithmic. Yeah, okay, there is a bit of a difference, isn't there? Doesn't touch it here. So let's adjust that and just see if it's affected things. Oh, so even on this fairly shorter time scale here, we've actually not broken it. Yep, confirmed. So here's a classic example of how the regular time scale can create a fake out. And will you look at that? We missed it. Almost got to it, but missed it. And that's fairly precisely placed, I think. Yeah, almost. In fact, maybe even a bit more. Yeah, that's bang on now. So yeah, we haven't even broken out of that on log. So that's how they often do these fake outs, is they'll fake out on the regular time scale, realizing that most people, virtually all people, tend to be using it, when actually on logarithmic, which is really what's needed, it didn't break out. And so that's why we don't see any follow-on. Because really, if that broke out, that should have massively broken out. And we should have had the retest and carried on. And it didn't. So that's what I mean. It's a fake out. Now here, this is really important. We look at where these last spikes have connected. You see these three? One line precisely. These lines didn't hit anything else in particular, particularly this one, this last pump we had, but it hit exactly on this line. So we now have a 3-point confirmed trend line, just as down here, and the other blue line, we also have the 3, 2, and 2, 3 points, and I'm expecting us to get another one probably around here. Looking at the kind of timelines, it's going to be somewhere along here. So it could be anywhere. If we dump, and we've already looked, we're already going down. Okay. It could be anywhere from around 6, 5, 30, 40 to around 6, 5. Yeah. 6560. Potentially it could go further. It could go further. Okay. There's not a lot left of this rising wedge. And the results of the rising wedge do tend to come in, I think it's about 54% of the actual length of it. But in my opinion, they tend to come when you've had 3 touches on either edge of it, which we've already had. So technically it's complete. This is going to be, yeah, about 50%. So anywhere around here, you can easily expect a potential breakdown. And we were talking a little bit on the channel about what kind of size of breakdown can you expect from something like this. It's not a pennant as such. It's a rising wedge. And technically, there's several ways of measuring it. One very simple one is to go from the very beginning of that, take the height like this, which is exactly what I've done, and you put it against where the breakout is. So I was imagining it might be here. And wherever it's going to be, somewhere along here, will depend on where it's going to go. So it could go anywhere around this area if it breaks down, which it has a fairly high chance of breaking down. And particularly on BTC, rising wedges have been my favorite pattern all year long. They've had the highest success rate in breaking down. And BTC loves to do rising wedge after rising wedge after rising wedge. But this year has been the year of the rising wedge and the BART and the inverse BART. So they're good ones to trade. So it's going to be somewhere in this area that it would be on its own targeting. But of course, it's not on its own. And I do recognize that we are not just in this descending diagonals that we've just been looking at, but of course we are having the ascending lines, various types of ascending line. You can probably see that better on my other actual log chart. So this is my actual log chart. This one though is on Bitfinex. I must admit I'm not using that right now, but this is my logarithmic chart. It's a purely log with all the diagonals, and you can see I've got quite a few long-term diagonals involved in this, and as well as the descending diagonals. Hold on one second, please. Okay, so these diagonals, let's zoom in on them a little bit. Here we go. You can see we've got them around this area now of about 6,480, 6,500 area. So if we break through on our rising wedge, if that then breaks these, then we've broken the entire giant pattern that we're in. And of course, we can expect a stronger dump than just 6,300 or so. And that's why, one of the reasons anyway, why I've been so bearish. And I do appear to be the last of the bears. And I am still bearish, particularly after seeing these fake outs that we've been having. And quite pathetic attempt to fake out with little volume as well. So that's a little bit about that. So let's now change topic to Nemeth, Joseph Nemeth. This guy, Joseph Nemeth, you've probably not heard of him. He has passed away, actually. He was a Forex trader who created his own company using algorithmic bot trading, where these bots would have actually many different strategies, not just one strategy, many different strategies. But the main one or two are the ones I'd like to explain to you about today. And they happen to be based on, the first one based on EMA. Actually, he used EMA 20, but I tend to find that EMA 21, which is a Fibonacci number, of course, tends to work better. And this is my Joseph Nemeth setup. But what I'd like to do with you today is set one up afresh so that you can have a go and doing it yourself. So let's do new chart layout. I'll do this on XBT USD. Actually, no, I'm not. I'm going to use Bitstamp for this one because I want a long-term version of this. And if you're using long-term charting, as in monthly, weekly, you really only got Bitstamp as a choice. Just look at that, all the way back to 2011, August. So first thing to know about a Joseph Nemeth chart is he uses Heikin Ashi candles. You see here that there's lots of different types if you're using professional. If you're using a free version, I think you only get the first ones. I'm not sure if you even get Heikin Ashi. You certainly don't get these. Actually, maybe these are the ones which are paid for, but he also uses Renko or Range. We'll come on to that. But basically, Heikin Ashi. You can also get Heikin Ashi on BitMEX chart. So if you open up BitMEX itself and you're into the charting, a lot of this you can do directly on that and for free. So he uses Heikin Ashi. Heikin Ashi is basically taking an average. So it's not the pure price action itself, it's taking an average of two candles and coloring them very simply, green or red, according to whether it's up or down. And so it's an immediate idea of trend. And it's pretty spectacularly visible here of how green and how red it's been this year, and that it is still red. And that's the first important thing to know about trend. So his system is a momentum trend following strategy. It's only effective when there is a trend. And that's a problem in BTC somewhat at the moment because it hasn't really been trending for some time. But on the long term, you can very clearly see what the trends are, the bull run and the bear run. So here, though, he doesn't normally, I think, apply it to the monthly, although you certainly would, I think, if you were trading, for example, stocks. But he was using Forex, which was mostly, he was using it almost as a scalping system, I think. But if you were using it on certain other charts, which are more longer term, then of course monthly and weekly. And I wanted to have a look to see if we can make sense of what's happening with BTC at the moment by looking at these longer time frames. And so I will first of all, I'm going to take the volume off. He doesn't use volume. And I know a lot of people talk about volume being so important. And yes, you can see how the volume's going down and how much higher it used to be back then. But you got to understand, when you're looking at volume, on one exchange only, you're not getting an accurate representation of volume for that, just for that symbol. You're also getting a picture of the market share of that exchange. And Bitstamp's market share has been going down with all the new exchanges coming about. Similarly, so if you look at Binance, you can see how its volume was going up and up and up. It wasn't BTC's volume was going up and up and up. It was their market share was going up and up and up. And so if you're going to do volume analysis, you would need to do something like this. You could add on, and then you would add on say, for example, another exchange, and you'd add on another exchange, many of them, and then you would divide, put them in brackets, and divide that. In this case, I'm doing 2, but I would normally use about 7 or 8 of them. And then you get a combined price, combined volume of those exchanges. Okay. So if you're going to go along those lines of volume analysis, make sure you do it not just on one exchange. Doesn't make much sense to me, especially when you're doing longer term. If you're doing it very short term, of course, it doesn't matter. Okay, so I'm going to take volume off. He doesn't use volume. It does. That's the vanilla chart. In this chart, this master direction chart, where he's looking at the main largest trend, the main largest direction. He's only interested in one thing. What color is the candle? That's it. Extremely simple. So candle at the moment is red. Therefore, he would only enter trades that were short. For this month, if we're using this kind of system on a monthly basis, this month he would only short. Just as in these months, he would only look for long entries. So all year long, he would be shorting. And that is to say, he would be trading with the main primary direction, the main master direction. Okay, so obviously such a system is going to be missing out on an enormous number of long trades. Okay, and that is a weakness of the system, is it doesn't do counter trend trading. But he's trying to go for the highest probability trades. He's playing extremely safe. That's his general principle. And he's only picking up the most highest probability sections of the trend to actually trade. So now you've got this basic one. He also, on the lower time frames, is going to be using an EMA. Now, of course, you could just add an EMA like this, but I tend to use my own script, and yeah, I've got rather a lot of them right now. I'm just using the MA turning point strategy, a basic version of it. But let me show you. That puts it to 20. He uses 20. I tend to use 21. Okay. I back tested it myself, and I thought, from what I can see, that EMA 21 tended to be better. Actually, one other thing, if you're going to use my one, better have recalculate on every tick to get the last candle. Although the last candle can repaint, so if you don't want repaint, do it the other way around. But basically, see, it's exactly the same. Okay, it's exactly the same. That's why I don't use these. I just use this one. This one, though, color codes it. If it's going down, it's red. If it's going up, it's green. At the moment, I think it's quite important to look at this. You see how this EMA 2021 area has been the support for this year. Okay, and right now it lies at 6160. So that's the support, and we've only ever gone a little bit below it. Okay, only ever went a little bit below it. So basically, if we went below 6K, that's a confirmed break of this entire trend. And look at the bear market that happened here in 2014. We broke it. We absolutely broke it. And so it went from about 400 and halved, more than halved. And that's what I've been, saying and warning and cautioning that could potentially happen. Many people have been cautioning that this could happen because at the moment, really, we're only around here. We haven't gone as deep, nearly as deep as that time. And one could argue, why should it go as deep? There are a lot of reasons why it went that deep that year. I understand that. Okay, and coming back across this line triggers the bull run. You see that? After that, all green. Whoop. So for him, the basic of his strategy is what direction is the EMA going in? Is it going sloping upwards or sloping downwards? If price is above a sloping upwards EMA 2021, then he's looking for longs. If it's below and it's a sloping downwards EMA, he's looking for shorts. Okay. Now he wouldn't apply it on this master time frame though. He's going to do that on another lower level time frame. But I think it's quite interesting to see that. And just for fun, let me show you moving average, simple moving average 20, which is the one that's used on the Bollinger Band midline. And we can see that we've had a cross on this, and that 6313.5 is the monthly Bollinger Band midline. So any close below 6,300 is extremely bearish. And again, that's what happened back here. In actual fact, these two crossed over first, and then bang, it went down. So that's why I'm still leaning bearish. Just looking at this, that's bearish. If you put on a MACD on it, it's very bearish. But let's add a MACD, because he does use, as another part of his strategy, MACD and CCI. I'll just add the MACD for the moment. Yeah. See what I'm saying? It's not getting closer. It's getting further away. Okay. Institutions use monthly charts. They'll be looking at that. They won't be ignoring that. Massive bubble, deflating. And still, compared to the bubble, it's barely begun, really, looking at it. Okay. All right, so now what we're going to do, see here, select layout. If you're on a pro, you've got several options. If you've got premium, you can do these ones. I'm only on pro, I think, at the moment. He uses 3 different time frames. I tend to use 4, like this. Bang, it copies it. And there's also some options to synchronize the symbol, which we want. Time. Right? We're going to have different intervals on them, but this basically synchronizes them. So now let's come to this second time frame and change it to weekly. So he then has, after the master direction, he has what he calls the trend chart, which is a shorter term, like a medium term time frame. Okay. In practice, he's using daily for the master direction on his Forex, and he's using sometimes a 4-hour for the trend. Sometimes, in fact, he uses several. He actually likes them all, from the 4-hour to the 2-hour, the 1-hour, the half an hour. He likes all of those to be synchronized to get the maximum probability trades. But he can do that because his software is checking every single Forex pair, which is a lot of pairs. And whenever he finds one pair that's that, his algo enters the trade. So he's going for very high probability, highly strongly trending coins. But if you're only trading BTC, for example, yeah, well, you're not going to get many trades, certainly this year, where that's occurring. Obviously, if you were screening across every single altcoin, then yes, you may well find instances where that's happening. But in practice, I think it's enough just to use 1 or 2 different trend charts and timeframes. So here we're going to experiment using the weekly. And so here, now these long and short things have been created by the strategy, but I don't actually want them. I have tried very hard to code this strategy, but there's several things that are basically broken on TradingView, and that includes virtually everything to do with Nemeth, including multiple time frames. It's completely broken. So it rules it out from that. Heikin Ashi, broken. It's so buggy. So let's take that off. Okay, so this is the weekly chart. And now you're seeing a little bit more changes in color. Red, green, red, green. Currently green, but below the 21 EMA, which is sloping downwards. So with a 21 EMA, which is sloping downwards, you would only be looking to short. And 21 EMA is at 7043. Some people want to know how you get this on the chart, by the way. Labels, indicator name label, and its last value label. And it's also good to set no overlapping labels as well. So he would only be thinking about looking long based on this chart when it goes over 7,050, something like that, and closes, I would say. Which is that hasn't really happened much this year, okay? And even then, if it doesn't correspond with the master direction, then he still wouldn't enter the trade. It's only when everything aligns he enters the trade. So at the moment, he wouldn't be short either, or wouldn't be entering short, let's be correct. He wouldn't yet be looking to enter short right now. If he was already in a short, he may be keeping it, but he wouldn't be entering it right now because this is currently green. Okay, when this goes red again, yeah, he would enter a short. He'd be looking to short in these last 2 weeks, for example. Certainly during these, he'd be looking to short. So as soon as it went to here, for example, short, stayed short. Okay, so that's the state on the weekly at the moment. Let's add the MACD and CCI aspect to it. For MACD, he's only interested in one thing on the MACD. Is it above or below 0? Okay, is it above or below 0? Not if it's crossed. Has it crossed or not crossed? So he's not looking at the histogram. In fact, we can probably take that just because it's going to confuse things. Not interested in the histogram. He's interested in this 0 line. And we're not yet above 0. Okay. So he would not be looking for a long until the MACD goes over 0. And it's a long way from there yet. Now, let's look at the daily. Actually, it's 3 daily. 3 days. So here's the 3-day chart. A little bit more zoomed in. And right now, we're still below the EMA 21. And spending long periods under it. But you're also getting some periods above it. But we're still below it right now. $6680. 6680. We almost got above it. Wow, we almost got above it, but we didn't hold it and haven't been able to hold it. Just as we haven't been able to hold it here, haven't been able to hold it here, haven't been able to hold it here or here. See the picture? We've been trying though, admittedly, have been trying. How's the MACD? Still minus. Basically, here's the 0 line. Still negative. That's all you need to know. Still looking for shorts. That's what that basically says. I haven't even come on to the CCI aspect yet. Just on the MACD and the EMA, still looking for shorts. Daily. Turn that off. Okay. Oh, looking a bit more positive on the daily though, right? It's getting more positive. We're actually getting above the EMA 21. Okay. So it's now looking on the lower time frames, it's looking a bit more bullish. But we've been above it and below. Above it and below. Above it, below. Above, below. Above. We just haven't been able to really stay above it. Currently at 6596, which is pretty close by to where we are now. 6596. On the MACD, we are actually above it. Above 0. Amazing. Am I right? Only, well, sort of on the dot, because the signal line is actually negative for Bitstamp anyway. The 0 line is slightly negative, you can see from up here. But the MACD itself has actually crossed 0. Wow, that's pretty good. It's crossed a while ago, actually, on the daily. Can it keep it up? So on this time frame, on the lowest time frame, actually, Heikin Ashi makes a slight difference, but not much. He'd actually be looking at either Renko or range. Renko or range. They're very, very similar. On a Renko chart, and Renko charts, if you haven't come across them, they look amazing. Totally different. And quite frankly, you could follow Renko, and only Renko, and do quite well. Enter when it's green, close when red, enter green, close when red, enter green, close when red, short it, close, short it, close, short it, close, short it. For example, you could do quite well at sometimes here, but right now it tends to be getting a little bit more compressed, smaller moves. Right now we're green. Now, for this, Renko does have some problems. This one is calculated using average true range, ATR, on a 14 length. Average true range, though, varies. It varies. So if we get some wicky, some high wicks, low wicks, volatility, the ATR changes. And so the box size changes. And so there's a problem on Renko of repaint. And so I personally am thinking to not use it. There is a more traditional assignment method, and you can specify the size of the box, which basically means the price. How large is the price? $100. Okay, for example, apply that. And that will be a little bit more reliable. But even then, it recognizes that it's unreliable. And so you see this new green box here, for example, it's a lighter shade. And that means this box hasn't become definite. It's still subject to repaint. If it goes down again, this box will disappear. It won't even be there. It could just become another red box. It's only when it goes past the box size that box is now definite. And it moves on to the next one. And it will change color. So there is a big problem here of repaint. Just to warn you about that. But one way to sort of get over that is by using, what's going on with my chart? Why is it all zoomed in? Okay. Is to use range. Not something many people use in the crypto world. There's a range chart like this. Now range here, basically it's again based on the size of the price difference. And there's lots of different options on that. You come down to here. Here are some of the standard ones, but I've added in a couple of my own, which you can do by clicking here. You can add your own individual sort of sizes if you're a pro. Right? So you just select range and you type it in. I've added, I think, $550. So for example, on this kind of a day chart, we might want, say, $100. So each one of these bars is representing $100 changes, I think. Oh, sorry, I think it's more, I think you have to divide it by 10. So it'd be more like $10 changes. So you could go to 1,000 range for $100 changes. So it's up to you, and this is something you're going to have to back test. But basically, his principle was this. He just said that he wants to know, is this actually moving? Or is it just going up and down within a certain range? He wants to know, is this actually moving? And that's what the range and the Renkos allow you to see, if it's actually moving, if it's actually trending somewhere. So he goes by the color of this. If the color of the Renko or the range is the same as the trend, as the master direction, they're all aligned, then he enters. And this is basically the lower time frame version of it. If you're using Renko, it would depend very differently on what time frame you're using. And so again, you can, if you're using Renko, you can experiment with different time frames for that. Okay. So at the moment, he wouldn't be looking for a short entry because it doesn't line up. It's still green. He would maybe look to being short in here. Certainly would have been short all the way down here, except again, if on his trend charts, he uses the EMA. But you have to decide for yourself what you're going to use as your trend chart and what you're going to use as your entry exits. And for the entry exits, he's focusing on the Renko, but he's also focusing on MACD and CCI. So for here, he wouldn't be too bothered about this, which on the daily, actually, just check. On the daily, the EMA 21 is currently at 6596. Oh, yeah, we're very close to that. 6596. Okay, but currently we're above it. So if you're wanting to use the daily as a trend chart, then you want it to be sloping, and it is still currently slightly kind of sloping upwards. So he would be looking at a long based on that alone, but not when this is red, or at least not when the Heikin Ashi of it is red. Actually, the Heikin Ashi is still green. So for me, this will be fine. So notice the Heikin Ashi can be different color to the normal candle because it's taking an average from the previous candle. It's still green. So he would be looking at a long based on this trend chart, but not if it's not in alignment with the master direction. And so when I'm looking at this very large time frame scale. Again, it was saying this isn't the right time to enter a short. It's not trending down at the moment. But that's still what he would be looking for based on the monthly, unless you're using it more on the scalping side. If we look at the MACD on the daily, again, we're seeing here that it's kind of on the line, that the main MACD has crossed over, but the signal line hasn't quite yet crossed over, at least when using Heikin Ashi on this. Yeah, it's still the same. Even on normal candles, it still hasn't crossed over. Okay, but potentially about to cross over, which of course would be very bullish on anybody's time, on anybody's system, crossing over. But look at this back here. That's when the signal line crossed over, and he went a little bit more before it went bang. So MACD is extremely slow, and so by using the MACD as well in this way, he really is, in my opinion, I think he's limiting the amount of trades he's got, that he's able to take too much. I personally don't use it in the same way as him. I've been trying it out. I don't use his system in the same way as he's talking about it. I would more likely to use the histogram and the changes in the color on the histogram. So when the crosses are occurring. So just looking at this chart on its own, Heikin Ashi, he would be looking to long on these two candles based on the up-sloping EMA 21, green Heikin Ashi, he'd be looking to long. But the MACD wouldn't let him long until either here or here. Whereas a cross on the MACD has already occurred. So from a histogram perspective, it's fine. So I do think you need to experiment. And I have been experimenting quite a lot with the Nemeth system, okay? In particular, the use of CCI. And I've even been coding my own version of it at the moment. But he uses a CCI 14 length. Okay, CCI, you could think of it as a bit like the RSI, in that it gives you an oscillator, it has these bands where so you don't look at it as overbought or oversold. Look at it as strongly trending bullishly or strongly trending bearishly. And for him, on his basic strategy, he only would trade when it's above, in a long, when it's above 100 and closes it when it goes back below 100. So for example, he would take this as his long trade. He would take basically around here as a long and closing it around here, which is not a bad trade, to be fair, if you were just trading on that basis alone. Okay, and he would only short when it goes under 100, and he would close it around here based on that. If you're looking at that, basically below the minus 100, he would be short again from here to around here. And the CCI, I think it works best actually on the daily and the 12-hour. I have looked at it on other time frames. I use it on the 4-hour, I use it on the 2-hour, and I use it on the 90-minute. And I've even looked at it on the 30-minute. I think it's better on the higher time frames, basically. But there's two ways of using CCI. He's using it like I just described, above 100, open, long, close when it dips back below 100, and open short when it dips below minus 100, close short when it goes back above minus 100. But there is another version of people using CCI in general who would open long here. Okay, just based on CCI, they would open long here when it goes above minus 100, and they would catch that whole run, and then they would close it in the same place. And then that is actually when they would short. So they wouldn't wait till it gets here, they would short from here. And you can see how that actually catches a lot more of the action, and they would close again here. So CCI, I think, in that way, and that's the way I tend to use it, a little bit more like that anyway, allows you to catch longer parts of the run. But remember, he isn't interested in catching long parts of the trend or the run. He's not trying to catch reversals. CCI can quite well catch a reversal. He's not looking at that. He's only picking out the most highest probability parts of the trade, of the trend. So up to you how you're playing that. What I've done is I've applied a Bollinger Band to it like this. You can apply indicators on top of indicators like this. And I have found that generally speaking, that when the BB midline, this BB midline, the SMA 20, when it's high, like this, it's high, it's above 100 even, okay, and the CCI crosses below it, and here it actually retests it, then that is the end of the bull run. And you can see again here, CCI crosses below a high, SMA 20, end of the run. Again, it's high. But it's just a way of basically cutting out a lot of the false signals that the CCI can give, and it can give a lot of false signals, I think. Same applies on the reversal. When it's low, and we cross it, bang, crossing a low version, then for me, that's a good long signal. And you can see again here. You can see again here. And it occurs kind of here, but it's a bit low, not particularly low. But everything gets a struggle in the current price action. Virtually every strategy is struggling right now because it's just so squeezed It's so squeezed. It's ranging. It's not trending. This is about trending. Nothing's trending right now. Ever since here, which did go quite high, that was quite a strong little run in a way. It had a good angle to it. Look at the angle on that. Of course, this was a much better angle. But it went high, it crossed it down, short it. And it actually did quite a good job of that, didn't it? But since then, it hasn't gone high, it hasn't gone low. It's just ranging. Here it went down, but didn't go under minus 100. Here it went up a bit above 100, but only briefly. And it hasn't been able to since. Right now, it's gone above 100 a little bit, but only a little bit. And it's already turning around. It hasn't carried on to the kind of heights that it had before. It's ranging. And that's the problem. So you can use this, but what he actually does is something a little bit unusual. Is he takes this chart and he merges it with a CCI like this. He overlays the two of them. He doesn't use the histogram, so let me take the histogram off. He uses it like this. And for him, he closes it when it crosses, CCI crosses the MACD. Now, I don't know if he cares, it wasn't really explicitly said whether he cares whether it's crossing the signal line or the main MACD, but that's where he's looking at on his system. It's an unusual way of doing it. I haven't personally really found that it's any different to using the SMA20, for example, but it's a similar idea. We've experimented with EMA21, EMA13, and I'm trying to write a strategy to be able to test this, although it's a little bit tricky due to problems in TradingView itself. You're welcome to try out, by adding on to the CCI and the EMA, for example, and experimenting with different numbers and lengths to try and see which one performs better. We're all experimenting. You're welcome to keep on experimenting yourself to see which one is it. Instead of just using the 100 and minus 100 lines, to use actually these kind of crosses. I'm personally using the SMA20, and whether it's high or low, that's what I'm using. And you can use the MACD as well. Because I don't use I usually use MACD4C. I like it. And I tend to like to just put it on area like that. And I just go along with its color. Okay. I find that just easier. Okay, so now let's give you an idea. Let's have a look at my normal chart, which is more of a short time frame version. I use the 12-hour here, which is saying it's green, it's above the EMA21. Oh, that's not too important because this is the master direction. Here you can see my CCI, my MACD, and so on. But basically it says, look for longs. At the moment, it says today, in this 12-hour period, you're looking for long entries. That's what it would be saying. So on a short time frame, it says, something quite different. And yesterday, it was green, and I went long briefly when everything lined up, and closed it very rapidly, and in profit. And it was a bit risky, as I said, that the higher time frames are saying looking for short. But this system on the lower time frames said, no, scalp it long. And to be fair, I think he is using it as a scalping system. Certainly on Forex, he's using it as a scalping system. Because he's using shorter time frames. He's using the daily, he's using 4 hour, 1 hour, 30 minutes. He's scalping. Simple as that. So here is the 4 hour. 4 hour though, it's red. So at the moment, not the time to open a long for him. It's not trending up at the moment. Yes, in the 12-hour period, it's looking nice, it's green, but here it's not. But it is still above the EMA 21, although the EMA 21 isn't really sloping much anymore and could even turn down. Notice on the MACD, it's already crossed. Not a good sign. Okay, it's already crossed. Okay, look at what happened there. So at the moment, he's not longing, and I'm not longing. And on our CCI, and this is where I do use it a lot, is on the 4 hour. Okay, I did go long because it went above 100. We went long, caught that period. It was green here. Above this is all signaling long, but it came back down again. And I think I actually used, I used a trailing stop on that one because I thought it was an extremely risky trade. But it did signal close, at least went over under the 100. It is getting, it's already, this is the EMA 21. It's crossed over that already. This is the SMA 20, the mid BB line. And it's, yeah, we're getting very close to going through it. It's reasonably high. So that to me would indicate potentially, if in the next 4 hours, we will know what's going to happen then, if it's going to go badly down. I also tend to use it on the 90 minutes. It's actually set to 1 hour, but I usually use it on 90 minutes and 2 hours, but we can look at all of those. And you can see it's red. It dipped below the EMA 21 on 2 hours. MACD crossed. This, yeah, you see the close signal it gave here, and it went through the mid BB, signaling close, and it did very well. You see on the 2 hours. 2 hours is for quite small waves. They get good for scalping. Still quite small though, particularly when BTC at the moment is so squeezed together. Such small moves it can do. But if you were to play it here, when it went through a low BB, and exit here when it went through a high BB, 6522 to 6611 or 6,600. It's about $80. I mean, that's the problem. It looks good on the chart, but it's such small moves. It's not really profitable to do it at the moment, unless you're doing extremely high leverage. Okay. But it's certainly not suggesting anything bullish at the moment. 90 minutes is actually below, and I like to use 90 minutes. Again, you need pro for 90 minutes. I like to use it below minus 100. It's trending down. It's actually below the EMA 21. You can't really see that on the Heikin Ashi, but you can see it more clearly like this. It's below it. It's looking very bearish. It's trending down. You have to choose your time frames that you like. I have traded based just on this time frame in cooperation with the master trend. When they align, you can do it. You can be more flexible, experiment with it. Depends on how risky you want to be. 1 hour. Yeah, it's looking pretty bearish, isn't it? Look at that. Below minus 100. So I'm quite happy. I'm actually short at the moment. significantly on many coins. So yeah, I don't see much reason to change that at the moment. It's all looking pretty bearish. And you can see on the Renko on the 30-minute, which is what I have been using. I'm still experimenting with that. And you can see it's not confirmed, but it is going down. Such tiny moves. It's really hard to say. Okay, so that's the basic idea of using the Joseph Nemeth system on XBT USD. It applies to any market from what I've been able to see. That is a commodity like gold. You could use it on stocks. I had a look at it using it on Apple, for example. Wow, it made money on Apple. So you can, using that monthly, weekly, 3-day, daily, and so on. If you're doing that on Apple, just take a look. You'd have made huge amounts of money. So you can use it on different markets. You can use it on different coins. Obviously, ones which are trending is going to make you money. You can't use this system on its own, though, because markets don't always trend. And so it's good to try and find out a scalping system. I think you can use his system to some extent in ranging markets. You just have to use the different time frames. And so instead of the master direction being the monthly or the daily, the master direction becomes the 4-hour chart. The trending becomes the 1-hour chart. The entry becomes the 15-minute chart. And that you could then look at the very short-term trends and play them and scalp them. But again, you have to make sure that the moves are big enough to be worth taking. So that is I'm just showing you one part of the Nemeth system, which is about entries and exits and the trend. There is a lot more to his system than that. The actual interesting bits is how he's hedging and how he's doing his DCA. But I think that'll have to be in another video because this video has already been far too long. Okay, I better let you get on with your lives. So thank you very much for joining me. I'll maybe make another video on the other aspects some other time. Thank you and goodbye.